Welcome to the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure, as always, to reintroduce Mr. Darren Sinden, market commentator for Admiral Markets. Darren, how the devil are you, sir?
Yep, not too bad, thank you, Nick. Thank you.
If you're watching for the first time, we go through a number of slides, number of segments ahead of Wall Street. If there's anything you think we could add into this segment, please let us know. I'm sure we'd be happy to take on board.
Feedback and suggestions are most welcome.
Understood. Okay, well, let's kick off, as we always do. Data released over the European session. What's caught your attention this morning, Darren?
It's actually been quite a busy morning, Nick, to be honest. So first things first, we'll look at something here in the UK. The inflation numbers for April, the CPI, Consumer Price Index, as measured on a year-on-year basis, came in the red, quite literally down minus 0.1%. Expectation had been for a reading of 0, which we've seen for the prior 2 months. This is the first negative read in UK inflation since 1960. I guess at that level, we don't have to be too concerned because it could easily be a statistical error. Having said that, it has set a precedent, one perhaps that we wouldn't want to see repeated when we get May's figure in a month's time. And then a couple of other interesting figures from across the continent. So first of all, the German ZEW economic sentiment read for May came in at 41.9 versus 48.2 forecast, so sharply lower, and a new 5-month low on that basis. Again, shouldn't read too much into one
data
read.
point.
Nonetheless, though, it's another sort of negative tone coming out of the Eurozone where we had got used to have hit to positive numbers and positive reads coming through. And then if we stay with the Eurozone, first of all, their inflation numbers for April, they were at 0, so bang in line at 0.0% change. It does depend how you dice these things. Just as an example, if you took out tobacco from those figures, then the figure was negative. So
right.
There's various other positive figures, and the Eurozone itself looks at, well, the bank looks at HICP, which is another measure of inflation. But nonetheless, a flat inflation scenario in the Eurozone on that measure. And then perhaps the main story this morning was the comments coming out of the ECB, or at least some of the council members. And ECB's Kerr spooked the euro. I think that's the only phrase to use, with his comments on QE and interest rates. And what he basically said was that the ECB would, I thought rather sensibly, look to front load their bond buying over the summer months by being more active throughout May and June in anticipation of a drop-off in bond liquidity in July and August. And
that sounds pretty sensible to old-timers like us. Absolutely.
But that seemed to spoon the market.
Obviously, euro collapsed, didn't it?
It very, very sharply too. And what's strange to my mind as well is that one of his colleagues, Neuer, was saying the same time that they would do whatever they wanted, and that the market should be assured that they will try and get the inflation back up to 2%. So you've got two members of the ECB Council saying almost contradictory things, but the market's chosen to go with Mr.
Find an excuse to sell euro.
Exactly, and that's probably what it boils down to in the end. Yeah, I think you've hit the nail on the head there.
Understood. Okay, so let's move on to the next slide. FTSE 100 movers.
Okay, well, we heard this morning from Vodafone. They actually posted their first service revenue growth in 10 straight quarters, albeit at 0.1%. The truth is that the guidance going forward was pretty lacklustre. The stock was called down 2.8%, and really they sold the crown jewels when they got out of Verizon Wireless a while ago, and they haven't found anything to replace it with, and the management hasn't really demonstrated to the market that it's got a cohesive and coherent approach to finding assets and a business that can replace that. So for now, they're down 2.8%, and I guess we'll see plenty of press coverage about them. Going the other way, Land Securities, a big commercial property company here in the UK, they're up 3.05%. LAND is the ticker here for the avoidance of doubt in London. Good figures, were better than expected, and NAV rose sharply. I think I'm right in saying it was up around 27% from this time last year, and the dividend was increased by over 3%.
What a perfect statement.
Yeah, absolutely. Indeed, and again, I suspect we'll see some positive broker comments and possibly some upgrades.
That one. Understood. Okay, so let's turn our attention to M&A Rumors and Movers.
Okay, well, we're coming back here to something we touched on in one of our very early shows back at the very beginning of May, and that is the chip sector being back in focus. And a couple of stories doing the rounds. On the 1st of May show, we talked about Altera being in the sights for Intel, and the stock rallied at 5.6% yesterday when the New York Post went with a story that's basically saying, you know, Intel are in the game and they are talking to Altera. And at the same time, we mentioned in that show to keep an eye on Xilinx, which looks very much like Altera in terms of its business. And now they're said to have been approached by another potential consolidator in the industry, Avago, AVGO, US is the ticker there. They're talking about maybe a 3 or 4-way combination with Xilinx and 2 or 3 other partners, and Silver Lake Partners, a large private equity company. And I think the thing about this sector is that they really possibly do need to consolidate to cut down costs and get some economies of scale going through their business. So we'll see what happens, but I think it's definitely an area to keep an eye on, because without a shadow of a doubt there are deals to be done in this sector, and probably 1 or 2 of these will come to fruition by the close of 2015, I would suggest.
Understood. Okay, so let's take a US data points to keep an eye on today. What's on this slide?
Okay, so it's a mixed bag really. In terms of actual economic data, it's pretty light. Housing starts for April. We're looking for a read of just over 1 million versus 926,000 in March. We've got Red Book chain store sales again. We saw a 2.1% gain last time out. We were looking for a positive number, remembering that this figure's pretty much been in decline since December, and this time we're looking for another number north of 1, and ideally somewhere around the figure we saw last week. Staying with retailers, because I think that's the real key today. It is the first day, or a big day in a big week for retail earnings. Both Walmart and Home Depot reporting today. 50% of the S&P 500 companies reporting this week are retailers.
Okay.
Now we've had actually the figures from Walmart and Home Depot. Walmart disappointed, missed on revenues and earnings per share, and the stock's cooled down 2.2% pre-market. The Home Depot numbers, they're also cooled down by 1.5%. I'm struggling to see what was wrong with them really. Like-for-like sales were up, the guidance was good, the beat on earnings and revenues. The market's obviously a hard master to please at the moment. As I say, they're down 1.4%, but many more retailers reporting throughout the rest of this week. So, give us a real idea of how the American consumer is feeling, I think.
Understood. Okay, so let's move on to the US pre-market movers and chart points to keep an eye out for. Okay,
well, we're staying briefly with the retail theme because Urban Outfitters also reported, that was after the close last night. This is a sort of lifestyle brand in the States. They sell all sorts
Sounds
of weird...
ghastly.
Well, it is if you look at the shops. But anyway, they sell wholesale and retail lifestyle products across several categories. They've basically suffering from a continuing margin erosion. The market doesn't like what it sees, and they're called down 15% pre-market. And secondly, you might recall we spoke about 2 mid-cap stocks in the US that I thought were likely M&A candidates going forward. One of those was Gigatronics, ticker GIGA. They're up 27% pre-market, positive Q4 figures, and another $10 million order for their specialist filters and instrument signalling, etc. Stock is up 50% month to date. It is a volatile play, but I think I reinforce the idea that that's one to keep an eye on. It's a very interesting stock. In terms of the markets, equity is generally a bit better. So the FTSE we're looking at 69.45 on the downside, 70.50 as an upside.
And obviously the Vodafone numbers are a drag on the FTSE today, aren't they?
Because it's because of its market cap.
Yep.
The DAX has exploded higher, though. It took great comfort from a weak euro, and that's an inverse relationship there. The weaker the euro, the better it is for the DAX. So 11,602 now our new downside level in the DAX. 11,848 we're looking for on the upside as a level to watch for a further breakout. As far as US markets are concerned, we're pretty much banging on the door of all-time highs again. So 2,100 even is the downside in the S&P, but we look for a move through 2132 to the upside, take us towards back towards new highs. The Dow, we're looking for 18,208 as a level to watch on the downside, and 18,326 is our upside level. Now euro dollar, as we said, retrenched, so we're back to support here at 111.42. Quite important that one holds on the downside there. 112.07 is what we need to watch for if we're going to recover some composure, if I can say that, and make a push back up. As far as the Aussie dollar is concerned, it's sort of shrugged off any comments that the Reserve Bank of Australia made early this morning. 79.50 on the downside is the level to watch, and 80.11 the upside range to watch. Dollar yen, yen has eased a bit, but still within that channel really that we talked about earlier in the week. 119.64 on the downside, 120.15 at upside level, and cable has come back on the weak inflation numbers. 154.77 is our downside level, and 155.85 the upside level to keep an eye on this afternoon.
Quite a few of those levels and those charts we've covered with Admiral at the beginning of the week. So if anyone's interested in looking at some of those levels, might be a good idea to go back to the Tip TV website, and dig that video out.
Yeah, on the show, wasn't it? Yeah.
Straight away, the Aussie US dollar, we were looking at a very bullish looking.
We were, and it is a little easier, but it has held up. And as we said then, people were buying the dips, and that seems to be the way that they're continuing to trade that one.
It's extraordinary. Finally, just the dollar yen is so quiet.
Yes, I mean it was. I mean today's move is not exactly big in magnitude, but it was probably the biggest move we've seen in it this week. It's
stuck in a very tight trading
very
range.
much in a rut for that one for the moment, and it's going to take something quite significant, I think, to break it out of that.
Understood. Okay, Darren Sinden, market commentator, Admiral Markets. Thank you as always for your continued support. That wraps us up. We'll be back same time tomorrow, 1 o'clock. Have a good day.